Hey everyone, it's Daniel here from etfs. Hope you're all doing well. So the best of the best investor out there came out and basically slammed the banks for hiding their losses and mentioned a couple of red flags within these banks. Who's that famous investor? You must know Warren Buffett. So Warren Buffett basically came out, and I'm going to read here the article and I'll post the description. I'll post the link in the description for you to read up on it as well. But basically the article goes like this. It says Warren Buffett has finally weighed in on the banking fiasco. He slammed lenders for taking unnecessary risks and disguising their losses, and revealed that he sold his stakes in several banks because he spotted red flags in their financials. So that's pretty scary, right? A guy like Warren Buffett, who's always liked the banks, who made a lot of money on the crash in 2008 on the banks. He made a lot of money, especially on Bank of America, right? Now selling and trimming his positions in the banks because he's worried about the financials. There's red flags. So it's really scary here because what is it that he sees that maybe other people don't see that caused him to sell those positions? You do have other people who say that, hey, don't worry, the banking sector is fine. We're not in any banking crisis. These are more of the smaller regional banks. But he didn't sell any of the smaller regional banks. He sold these big banks, which I'm going to get into in this article. So the famed investor and Berkshire Hathaway CEO told CNBC on Wednesday that several banks engaged in misleading accounting to artificially inflate their profits. That's pretty bad. He gave the example of banks valuing their long-dated bonds at their par value instead of their market value, which hid the fact that their value had fallen on paper. Okay, so that's a very big issue. If you got accounting issues like that, and even though maybe the government or the regulations may be in favor or allow some of these banks to do this, definitely, it does paint a ugly photo, ugly picture when you really start to figure out what's under the hood, which caused this banking fiasco, which caused the issues with the banks like Silicon Valley and so on to basically plunge. Now, he also goes on, he says, I didn't like it when people get too focused on the earnings number and forget about banking principles. Some of the dumb things that banks do periodically become uncovered during this period. The 92-year-old billionaire noted that banks that have run into trouble in recent weeks didn't make the same reckless errors they made in the lead up to the financial crisis. So he's not calling it that, okay, this is similar or the exact same of the 2008 crisis. Instead, they mismanaged their assets and liabilities, which is still a problem. Definitely, that's still an issue, right? Especially if the banks are doing that, which he described as an eternal temptation for the banks that bites them in a big way. Now, when you scroll down in the article, it says Buffett also underscored the importance of people feeling their bank deposits are safe. It's important that banks retain the confidence of the public, and they can lose it within seconds. He said, well, yes, I mean, in a world like technology, you are seeing the deposits of the banks really depreciate, right? So now you can go on your phone in a virtual world and send that money, transfer it out, and put it in money market funds, if you understand what that is, or if those depositors understand what that is, within just clicks of a button very, very quickly, right? So obviously that will create a contagion effect and a lot of more pain for the banks as those deposit levels depreciate. So Berkshire chief said he sold certain, now here's the thing, he sold certain bank stocks after seeing signs of trouble in their earnings. Okay, so what are those bank stocks that he sold? So those include JP Morgan, Goldman Sachs, Wells Fargo, PNC Financial, US Bancorp, and BNY Mellon. The investor emphasized that he didn't see problems at all of them. So not all of them, but he saw some red flags, which basically got him to sell his bank shares completely because of those red flags in those financials, right? Didn't really dive into the deep details of what those red flags are, but definitely it is a red flag when you get the best investor out there like Warren Buffett saying, hey, especially what he's been through during the 2008 great financial crisis, saying that, hey, I'm selling out because I don't know where this is. Probably, again, you could be like, I don't know where this is going, but if it doesn't go in the direction of a positive direction, it goes really negative and goes really south, this can really snowball into something very, very ugly. And you can see, the market value for a lot of these bank stocks really drop very, very quickly, right? And some of these names, some of these banks like Wells Fargo and the other ones out there, which are heavily exposed to the liabilities, to not marking the bonds perfectly, and also exposed to commercial real estate and so on, definitely poses a big risk, especially if they invested a lot in assets like commercial real estate, and those assets are the companies that have taken a loan and decided to get rid of those assets or not pay their loans or not pay their mortgages on these commercial properties, and they go belly up, definitely the banks will feel the pain. And Warren Buffett did mention this in an interview, saying that the banks should just take the losses, let it be, try to do what you can to mitigate the risk, but just take in the losses and get with it already, right? So, but since, obviously the banks are going to do their best to avoid such a scenario, this could take time. And as the snowball rolls down the big hill and grows and grows and grows, just like what Warren Buffett saw in those red flags in those financial statements, it could really cascade and there could be a contagion effect that really blows up, right? And if not, then no big deal. Obviously, he's got cash to buy the dip or buy and invest elsewhere, or slowly get back into the market. But definitely selling and saying that there's red flags in the financial is a red flag. Does make you think that what is Buffett seeing? Does he see more than what we know right now? And where does he truly think where this economy is going to lead to? And how bad is this recession going to end up being? Let me know what you guys think about this. Leave a comment below, subscribe, hit the like button and bell icon to be notified on the next video, and I'll see you guys around. Cheers. Bye.